welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. With the dramatic pandemic-driven shifts in investor attitudes, behaviors, and expectations creating a new financial reality, Thought Lab, sponsored by digital consultancy Publicis Sapient, along with other partners, commissioned a study exploring how wealth and asset management providers are adapting with the times to meet consumer needs. Joining me to discuss is Dave Donovan, Executive Vice President of Financial Services at Publicis Sapient. Dave, it's great to see you again. Welcome back to Trade Talks.
Great to see you as well, Jill.
All right, Dave,
Thanks for having me.
you got it, and give us a high-level overview of the survey.
Sure. So just to set up, so we surveyed, the survey happened in the summer of this year, and we surveyed 500 investment providers, and that range from, your investment advisory firms to your large-scale retail asset managers, private banks, and family offices. And it was a global survey, so 30% of the respondents were in APAC, 30% in EMEA, and then 40% in the Americas. And essentially, along with that survey, we then surveyed consumers or the end clients. We surveyed 2,300 different investment type clients, again, across many different demographics, from billionaires to ultra high net worth, and mass affluent. And that breakup was essentially around 40% baby boomers, and then about 30% Gen X, and the rest Gen Z. So it was a pretty comprehensive study. And what was interesting is there was a lot of information, a lot of data, but I would say there was sort of 6 main key mega trends that came out of that survey. The first one was shift to digital. Certainly, that was a priority for everyone. Many of the investors or clients, whatever you want to call them, they felt like that was the number one priority in choosing their investment manager or their financial services providers. They wanted simple, intuitive, personalized experiences. And in a lot of situations, they didn't feel like they were getting that, but that was the priority that they socialized to us. The second major trend was investing their money with a purpose, and that gets around ESG and social impact investing. They wanted to make sure that many of their investment dollars were going towards those types of initiatives. The third one was really around democratization of their investments. So what that meant is that there was this idea of, like, a lot of investment professionals provide products and services that are not necessarily tailored to their personal needs. And so they wanted to explore other alternatives, whether they be IPO or alternative investments. Certainly you and I have talked in the past about crypto and DeFi. That wasn't part of our survey, but I think what was important was that investors are open to other sort of alternatives to investing their money, not just putting them in your traditional sort of investment vehicles. The fourth trend was higher standards. So they wanted to make sure that whoever was managing their money or looking after their financial affairs was doing it with their best interests in hand, being ethical and above board and transparent, and taking into and prioritizing, like, regulatory issues and tax advantages. And the fifth one was really around lowering fees, especially with the more what I'd call ultra high net worth and billionaire people. I think they felt like the fees that they were being charged for the services that were being provided were extremely high. They wanted to see their fees more tied towards performance. And then the sixth major trend was that we saw over 30% of the people that we surveyed had no problem switching their investment manager if they didn't get what they wanted, which I thought was really interesting.
Yeah, that is interesting, and the growing digital and social imperative certainly makes sense. Those are the times that we're living in right now. Was there anything, if we take a little bit of a deeper dive when they select wealth managers, what criteria mattered when they were evaluating which manager to select when it came to ESG, when it came to operational transparency?
Sure. So both of those were very important to them. Clearly, they want digital solutions that are simple and transparent. easy to use, simple and easy to visualize, easy to understand where their investments are going. They want their financial advisor to provide them with innovative investment ideas, high returns based off their risk tolerance. And as it relates to ESG, it's interesting. Most people think that ESG is a priority for younger investors. But what we found in the survey was that baby boomers found that just as important as your younger demographic. They were actually in some cases more interested in investing their dollars in ESG. And the main reason is because they just feel that companies that are ethical and acting in a socially responsible way are more apt to create better returns on capital, which I thought was kind of cool, which would make sense. And so they definitely expect ESG solutions with their financial advisors.
That is interesting with the older demographic. Dave, was there anything discernible that there was a move away from?
So there was, there's certainly a move away from this idea of paper, as well as these sort of scalable products that we've seen with banks and with asset managers, that are products that are built for scale, but not necessarily personalized. I think a lot of our respondents are really interested in their financial advisors becoming more personal and creating more solutions that will essentially provide personalization to their financial goals. So instead of like designing products that they think their clients want, they would love for their financial institutions to understand more about them and then design products around those goals that they want to achieve.
It's so interesting that you bring up personalization, because the reporting that we did over Black Friday and Cyber Monday went back to consumers and responding well to marketers that felt that they had personalized messaging, even just for their basic shopping needs. So it's interesting to see that there's a parallel with their wealth management needs as well. So Dave, to wrap up here, what will investors be looking for over the next 2 to 3 years?
So I like to use this favorite line. I think that investors are, when they think about banking, they don't think about banking in the banking moment. They think about banking when they're doing other things, like when they're shopping, when they're going on vacation, when they're going out to dinner. And so for me, and the survey sort of proved this out, is that the people that were surveyed really want their financial institution to understand them at such a personal level that they almost sit like a personalized CFO in their pocket, and can provide services that are easy, seamless, transparent, and socially responsible, so that they can feel like they can live their lives, knowing that that their financial advisor has their best interest at heart.
All right, Dave, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.